Rakesh Agarwal. He is a chartered accountant and Secretary General in Risk Management Association of India and also an editor in Insurance Times. Shri Tarun Singh Ji, who is the Chief Executive Officer of Finexture Consulting, a very renowned professional. Then my friend and renowned ERM author, Shri Sanjay Kumar, Consulting Partner, Insurance, BFSI, CRO Initiatives in Tata Consultancy Services.
Good morning, everyone.
I would also like to acknowledge the presence of our senior BVSS Bangalore Executive Committee members and members from the BVSS Delhi chapter who are there in audience already, who have tuned in to this interesting program that we have planned today. But before start of the proceedings, as is customary for all BVSS programs, I request all of you to join our hands for Vande Mataram once the music, Vande Mataram music is played from the background. So over to you, Lakshmi and Vineet, for Vande Mataram.
Vande Mataram, Vande Mataram, Sujalam, Sufalam, Malayaj Sheetalam, Shasya Shamalam Mataram, Vande Mataram, Shubhra-jyosna pulakitayamini, Pulla-kusumita dhrumadala-shobhini, Suhasini, Sumadhura-bhashini, Sukhadam Varadam Mataram, Vande Mataram, Vande Mataram.
Bharat Mata Ki
Jai.
So friends, also before we set on to this journey of learning for next 1.5 hours, I would also like to remember Bhagwan Ganesh and Ma Saraswati to bless all of us here so that this discussion brings out some good learnings to all of us, as I always do. Friends, we know that insurance sector plays a very crucial role in alleviating the people's fear of sudden misfortune and contributes to the economy by enhancing its financial security, peace of mind of the people, and then in turn turning this accumulated capital into the productive investments. India's insurance industry is one of the premium sectors which is experiencing upward growth, which could be attributed to growing incomes and increasing awareness, increasing needs of the society. India is now the 5th largest life insurance market in the world's emerging insurance markets. We have 57 insurance companies in India, 24 in the life business, 34 in the non-life public sector, and we also have a sole national reinsurer in the name of General Insurance Corporation. India's insurance penetration, which is pegged at 4.2%, I was reading somewhere, which was 3.76% in FY20, but in FY21 it was substantially increased. Further, with life insurance penetration at 3.2%, and non-life insurance penetration at 1%. The overall market size is estimated to reach $200 billion by FY27. That means FY26 to 27, 31st March 27, at the present growth rate. Now, having said that, a lot is happening in the industry. Our IRDA current chief, Mr. Devashish Panda, recently expressed his aspirational plans in an insurance industry program, where he said that industry growth will also be contributed. Specifically, he mentioned about venture capitalists, private equity players, and family offices of India. And then I was also reading somewhere that according to S&P Global Market Intelligence data, India is the second largest insurance technology market in Asia Pacific, accounting for 35% of US dollar 3.66 billion insurtech focused venture investments made in the country. Because of all these trends, we have planned this program to address first of all, to share what is going around, and then also to address your questions of what impact or how it will impact finance professionals, how it will impact the Indian economy. And that is why we have the best experts of India today to discuss this. We have, friends, recently also observed that, the importance of the global insurance industry. If you would have noticed that European Union recently unveiled the insurance ban in 6th set of economic sanctions on Russia in a bid to control the Russian oil prices. So that is the power of European insurance industry. So that gives us an idea about how important the insurance can be from time to time. So I am sure you have so many questions like this in your mind. My idea was just to, ignite your mind, kicking it towards, acclimatizing it towards today's discussion. But before I, give the baton to our eminent speakers, I would also like to introduce BVSS and RMAI a little bit for the people who are, because it's a joint program, so there could be members from both the sides. So first, I will introduce RMAI. It is the Risk Management Association of India. It's a global body dedicated to the cause of research and development in the domain of risk management. It was formed in 1992 and is one of the leading platforms for risk management professionals, insurers, bankers, and corporate entities to exchange resources relating to risk management. And it also offers some MDP programs and certificate courses on risk management and allied areas. Friends, most of you know BVSS, but still for some of the RMA members who have joined us today, in their interest, I will just introduce BVSS Bangalore chapter to them. BVSS is a leading think tank of Indian finance professionals having membership from chartered accountants, company secretaries, cost accountants, tax advocates, bankers, educationists, financial consultants, brokers, the capital market participants, board of directors of large corporations, etc., etc. And Bangalore chapter of BVSS is working on 5 themes. First is the theme of economic think tank, where we give constructive feedback to government policies, consultation papers, etc., through various channels that we have. Then we have the second theme of BVSS corporate governance program, where we have clubs. We have board of directors club, CXOs club, auditors club, company secretary club, investors club. We do various debates, and we take some suggestions and feedback under these clubs. A lot of our committee members of BVSS are part of NFRA, ICAI, ICSI committees, and also board members in the public sector as well as private sector banking, banks as well as enterprises. So that is how BVSS works. We also do a lot of programs or webinars and physical programs also on contemporary issues faced by finance professionals. We have finance literacy program. It is yet to be launched in Bangalore, but the concept is to enable the policymaker and the journalists to be able to understand the financial events and then report them properly. And last but not the least, BVSS Nation First program and Women Inspiration program under the aegis of the Dil Se Dialogue, where we interact with leading, prominent ladies of India or abroad to share their life lessons with the, other junior members of the industry. So with these words, without keeping you away from the knowledge that you have actually joined here to get, I will request Mr. Nilesh Sathe to give his keynote address. Over to you, sir.
Thank you. Thank you, Naval Bajaj. And Thank you, BVSS, for giving me this opportunity. Today's topic is the insurance industry trends, challenges, and opportunities. Of course, trends, we all know, and Naval also has shared some of the glimpses of what are the trends. In India, the penetration of life as well as general is increasing. In case of life, it has gone up to 3.2. In case of general, it has exceeded 1 for the first time. And we have actually overtaken UK in this. But then let us not think that we have become bigger than UK. In UK, most of the people who take life insurance, they take only term insurance. So obviously the premium is less. But in case of India, we have seen, although in the recent past, there is an increasing demand for term insurance, but by and large, the composition is over 90-95% towards savings-oriented policies, as a result of which the total premium is quite high. In case of UK, since not many prefer the savings-oriented insurance policies, obviously the total premium collection is less, as a result of which penetration can be seen as less. But all said and done, coming to the statistics, we have certainly overtaken UK. Another trend which has been seen all over the world is that because the interest rates were quite dampened and moving southwards, or in some of the countries they were either zero or sub-zero. In the recent couple of months, I will say, they have started rising mainly because of the geopolitical reasons we all know. Inflation is on the rise, and as a result of which the interest rates are also going up. But again, it cannot be on a long term. Let us be aware of it. As a result of which the with-profit policies which the customers take in India especially, the insurance companies were not in a position to give them formidable returns. Now, because the interest rates are moving northwards, I think let us not presume that they will continue to move northwards for a long period of time. And the return on investment for life insurance policies will continue to be subdued. So this is one trend which we'll witness. Second thing, on global parameters, we have seen that the annuity business is also shrinking. In case of India and some of the developing economies, annuity is a business which is growing very fast. Actually, in one of the papers which I read, it said 84% of the individual annuity growth has happened in India, which is quite substantial. One more trend which we have seen is the digital and mobile usage in selling and servicing of insurance policies. Not only in India, but abroad as well. Rather, it has already been there abroad, but in India, it has started in the last couple of years. So the digital and mobile advances have raised the bar on transparency and the service quality also. Customers can now file the claims in case of general insurance. In case of life insurance also, some of the companies have started giving this option. Access the agents, because accessing the agent in the past was very difficult. You have to physically go and track him. Now you can simply call him and he will be at your service. Insurance quotes can be received just at a click of a button. We know there are web aggregators, there are brokers who have all sorts of platforms being made available to the prospects. And you can compare the premium rates, you can compare the servicing standards, you can compare whatever you want to. And that will help you to take unbiased decision. And that is one new trend which we have seen, especially in case of millennials, because they do not want actually to interact with physically with any of the agent. They want to, search, surf, Google search and all that, and take their independent decision. Although I am from the insurance industry, my son, who is in the IT industry, he took his term insurance through a web aggregator. And term insurance to such an extent, which is actually as per the human life value. We have seen many times in the past that the agent generally is not inclined to give term insurance for various reasons. One is he may be feeling that once the person is having full insurance to the extent of his human life value, he may not come back to me again. That may be one of the reasons. Second is, in case of term insurance, everybody knows that the commission rates are slightly lower than the savings-linked plans, or whatever reasons are. But the question is, this is one trend which we have seen in the last couple of years, especially the millennials, that they prefer to eliminate the agents and directly go to the sites of the insurance companies or web aggregators or the broker sites and take their own call on how much insurance do they need and what amount of premium they have to pay for it. As far as trends are concerned, we have seen in the last 2 years, because of COVID, since one-on-one interaction was not possible, that also helped Indians to move on to the digital platform. Even the agents also have been promoting their own digital platforms, and a large number of policies or the prospects have now been using the digital platform for taking an informed decision. This is one more trend that we have seen. Having said that, one great thing that has happened in the last couple of months is that during the last 3 years, because of pandemic as well as for some other reasons, the insurance industry had almost come to a standstill. Not many changes had happened. A lot of things were required to be done, but they were not happening. And fortunately, on 12th of March 22, Mr. Debashish Panda, who was earlier with DFS, he took charge as chairman of IRDA. And immediately after taking charge, he started a lot of initiatives. He had interaction with all the promoters. He had regular interaction with all the CEOs. And he asked them precisely, you tell me what is it you want. As a result of which, IRDA or any regulator, by and large, is always criticized that the regulator doesn't listen. Fortunately, now there is a regulator who is at least listening. And not just listening. In the last 6 months, we have seen what great number of changes IRDA has brought about, especially on compliance. There is a ease of compliance. Use and file is a big change which has been brought about. IRDA has been thinking on giving licenses on separate lines of business or region-wise licenses, thinking of reducing the capital requirement for new entrants. Risk-based capital will be introduced in a couple of years. Risk-based supervision is also underway. Now, see, this is precisely what will help the industry to grow. I don't think it is the responsibility only of the insurance companies to see that the penetration goes up. It is responsibility of every stakeholder, including the government. And at least from regulators' point of view, and we know that in case of IRDA, it is regulator and developmental role is also with the regulator. We have seen in the past couple of months, the developmental role is being focused quite well by the regulator. So this will also help the industry to grow further. These are the trends that we have seen in the past. Now let us see what are the challenges. The main challenge is still the per capita income is pretty low. We know that basic necessities of life, if cannot be fulfilled, who will take insurance? Insurance becomes the next priority. It is not the first priority. With the direct benefit transfer, with the free food grains which is supplied by the government, these steps are helping people to increase their level of earning. But the actual level of earning will increase when the employment opportunities will grow up. And from that point of view also, government has been taking a lot of steps. We know there have been the PLI scheme which has been introduced. The SME sector has been focused. I know for certain when we are buying the helicopters and the planes from abroad, we are putting a condition that some of the parts should be manufactured in India. And as a result of which, some of the companies have started manufacturing in India. These things will definitely help the insurance industry also to grow. Because when the per capita income grows, obviously more amount of money will become surplus. And that can be put in insurance sector or the financial sector for that matter. Let us not unnecessarily compete with banking, mutual fund and insurance. These are all financial sector. Let us not think of whether A is better than B or C. Everything is good. What is important is people should move on their savings from non-financial savings to financial savings. Now, whether it is banking or insurance or mutual fund, it is immaterial. Because investment in non-financial savings doesn't help anybody. What is important is they should be diverted to the financial savings, and that will help the country to grow. So this is important. And the next decade is going to be dominated by India. This is what is my personal view. Everything is put in place now. A lot of focus is given on infrastructure. A lot of focus is given on digitization. A lot of focus is given on telecommunication, IT industry, agriculture, SME sector, as a result of which I'm sure India is, people laugh at when such word is being used, is likely to become a Mahaguru. But then let us not call it a Mahaguru, but definitely India is going to be in a formidable position than what it was in the last, not 75 years, but last many years. And when India is going to grow, when we are going to grow, obviously every sector is going to grow. And Chairman IRDA has expressed a wish in the 75th year of independence that by the time India celebrates a century, 100 years of independence, everybody should have insurance. Every insurable person, not everybody means not small children and all that, but every insurable population, the entire insurable population should be insured. And I'm sure that is bound to happen. Now let us come to the challenges. It's not that it's all easy. The unemployment, as I said, is one of the challenge. Then the customer centricity is another problem. Reaching to the customers is another problem. And satisfying customers by giving them seamless service is another problem. The focused underwriting is another problem. Why I am focusing on underwriting? Many insurance companies have started making use of technology in underwriting. It is not that in the past we used to underwrite every life as an independent, separate life. But now that is not happening. With the evolution of continuous underwriting, it has made possible by increased data and device activity, the data gap is also increasing because verification is becoming difficult. As a result of which, we have seen and we have been witnessing a couple of frauds that have been seen happening in the insurance industry. Very recent one, a person who was alive had submitted death certificate and tried to claim huge amount of money from insurance company, but it was stopped. So usage of the automation, artificial intelligence, and the linkage of data points will help the insurance industry to actually stop such type of frauds. The bureau, which is at Hyderabad, Insurance Bureau, is also doing a lot of research on this aspect. And a couple of years back, it has come out with a report on the areas in which fraudulent claims have been reported. Now that helps insurance industry, one, to have differential underwriting processes in those areas, to give more training to the agents in those areas, and taking action against the intermediaries as well. So this is something which helps the insurance industry. We have McKinsey's survey of European customers found that 54% of customers now prefer direct or digital channels, up from 38% before the pandemic. Now, in India also, we have seen a trend how it has gone up. But will it really go up to that extent? In case of mutual fund, we have seen that 10 years before the direct channel was introduced, higher NAV is given if you take mutual fund, if you invest in mutual fund, not through IFA or the national distributor, but directly. But even today, not more than 10% of the total investors have gone for the direct channel. Moreover, in case of insurance, insurance is a matter of solicitation. And as a result of which, we may not find direct channel booming so fast. This is what is my understanding about it. At the same time, the professionals, the agents, will continue to play a critical role in reaching to the customers. So insurers must embrace integration of physical and digital channels. Now, life insurance companies can direct leads to the channel or agents that best serves each customer's needs. Further, the agents will have to be armed with the advanced analytics on their customer base, as well as providing digital leads. Throughout the customer's life cycle, life insurance companies will engage in multi-channel, personalized customer interactions to promote cross-selling and proactively reach out to customers who are likely to insure themselves or the policies which are likely to lapse, both the things. Such interactions have the ability to reduce customer acquisition cost and reduce the customer churn also, as per one of the studies which is conducted. The risk-based capital which will be implemented hopefully by 24-25 will give rise to many challenges. One challenge is there is a possibility that the companies which are focusing on higher savings-oriented policies probably may have to put in additional capital. This is possible. And the general insurance companies which have shorter tail, as is called, probably may not need so much of capital. or the new insurance companies which are coming up, which are likely to be given licenses based on region or based on line of business, probably may not need so much of capital. The insurance companies need to give flexible offerings to the customers. Customers need a lot of options. And from that perspective, the insurance companies will have to design more and more products which are customer friendly, and value-added services will have to be given. Telematics, lot of usage of appliances in insurance, especially in case of general insurance, will be required to be made. Naval, do you have, whether I have another 5 minutes or I should stop?
Sir, we have 5.
Okay. The skills and capabilities will need to be improved upon, not only of the agents or the intermediaries, but also of the staff members. Because what we have seen in the past is the same people have been doing same type of job, as a result of which they do not look at what is happening outside. That should undergo a change, and it should undergo a change radically. We need to have radically different workforce underpinned by skills of the future. By 2030, one of the reports said 44% of the insurance work activities have the potential to be automated. Now, once these get automated, obviously the workforce should understand what is being automated and what is the use of it. And they should accordingly change their style of working. Upskilling and reskilling of employees is also need of the day. And the skill gap, especially on usage of IT, has to be addressed. Insurance companies that prioritize these efforts and develop operating models capable of responding to changing demands will distinguish themselves from peers and position themselves as future organizations. Means not just today, but a long-term future organizations. Life insurance companies can also rely on acquisitions. We have seen Exide and HDFC Life merging, that is Exide merging with HDFC Life. The approval was given just yesterday. The size of insurance companies has to grow, and it can grow phenomenally by acquiring other insurance companies. Insurtechs also will help the insurance companies to grow. And from buy to build or build to buy, these are the two questions which are always asked in insurance companies as far as insurtech is concerned, whether I should do it myself or I should get it done from outside. And a company like LIC has always believed that it is better to build than to buy, but it has its own limitations, as we have seen. So this question also will have to be addressed by the companies. And in case buying is more beneficial because there are experts who develop it, that should be thought of. The next decade will witness India to grow on all parameters. The GDP will rise, per capita income will rise, middle class will grow, dependence on agriculture sector will come down, SME sector will grow, and India will be a preferred destination for manufacturing by foreign investors. FDI will increase many folds, and insurers will have to take advantage of the changing times and should be ready to grow at phenomenal rate. By the time we celebrate 100 years of independence, we should aim at what is the vision of chairman of IRDA, that is, everybody who is coming under insurable population should be covered with insurance. It's no doubt a big challenge, but with the regulator doing everything to support the industry, I'm sure the industry will accept the challenge and make it a reality. I thank BVSS and CA Naval Bajaj for the opportunity to share my views. Wishing happy Diwali to all the attendees. Thank you very much.
So thank you so much for a very elaborate and thorough keynote from your side. I think the key message, if I have to, put it, is that there is a lot of change that is going to happen, and we all need to change ourselves. All means I'm including the regulators, including all the stakeholders, as you rightly mentioned. And therefore, that is why we have the three speakers, eminent speakers, who will further detail it out for the interest of the audience here. And there cannot be a better panel, I think. So first of all, let's go with the flow. I think Dr. Rakesh will majorly focus on the financial inclusion and the industry perspective. Then we go to Tarun Singh ji. He will give us the perspective from the InsurTech perspective, and then we go to the enterprise risk management side with Sanjay. But before I go to Dr. Rakesh, just one quick comment I needed from your side, sir. As compared to the global insurance landscape, Indian regulator, where do you put the Indian regulator right now in the current context, vis-a-vis how the global regulators are dealing with these situations? Just a quick comment from your side.
Yeah. See, when I was in IRDA, I have attended many meetings of international insurance supervisors. They don't call regulators, they call supervisors.
Okay.
And they regard Indian regulator as one of the best regulators. We have seen it in many meetings and forums. And they look at India, what India is doing. Many other jurisdictions they follow, like especially Bangladesh, Sri Lanka, and many of these South Asian and African regulators. They followed our micro-insurance regulations, they followed our capital requirement regulations, so on and so on. So Indian regulator is good, no doubt about it, but has to do a lot. And good that they have of late started paying attention to what is required. And hopefully that will continue.
Yep, thank you for your comment. Now, with that note, I'll request Dr. Rakesh Agrawal to start his deliberation. Dr. Rakesh.
Yeah. Thank you, Navalji. Satya sir, as usual, has very well summed up the current insurance industry scenario and trends in the insurance industry, and made my job easier also and little difficult also. So we have learned a lot of lessons from the pandemic, and I believe these learning would help the industry to grow in a positive way. And I think this would be a great case study on risk management, as most of the best risk managers in the world did not expect this kind of disruption. But COVID had a positive impact, actually, which has significantly accelerated the opportunities of digital engagement and digitized delivery of product and services for the industry. And going forward, I believe the technology would play a great role in the insurance sector. Recently, IRDA have taken a lot of initiatives in terms of standardization of products, introduction of sandbox, allowing more freedom to insurers in launching products through file and use procedure, as Mr. Satya talked about. New startup in InsurTech, they are organizing one hackathon also to push this space, reviewing current regulation, ease for doing things. And I think all these measures will ultimately prove to be a major catalyst in transformation and growth journey of the industry. Recently, IRDA chairman has given target to all insurance companies to double the penetration by 8 to 10% by 2027. I think most of the insurers are on their toes because they are first time any regulator has given them targets. And currently the penetration stands at 4.2%. So in fact, during the last 75 years, we could manage this percentage, and in next 5 years, achieving 8 to 10% is quite challenging. But yes, Mr. Panda has given a very ambitious target, And it seems like he's playing T20 in insurance industry. But for playing a good game, we need to have a good pitch. So do we have a good pitch? So that the whole insurance ecosystem and value chain of the industry needs to be revisited, and the gaps needs to be plugged. I would like just to share some pointers of the current situation and opportunities and key takeaways for the industry. Can I share my screen now?
Yes.
Yeah.
It's visible.
Yeah, it's visible. So as we see, the world insurance protection gap for health, mortality, and natural catastrophe risks is around US $1.42 trillion according to a C3 report. And if we see the current protection gap in India, it is around 83%. These were few of the observations made by IRDA chairman also. In India, 43% lack health insurance coverage. And 50% of the vehicles are uninsured in India. Even we have this compulsory insurance, 50% of the vehicles remain uninsured. Home property, again, this is a coverage is far from adequate in this sector. Mostly we see people go for coverage only when they go for any home insurance or loan, when they take loan against property. So in insurance industry is the 10th largest in the world in India. In the world, it's the 10th largest, and the aim is to move towards 6th largest if we achieve this penetration target. Again, health insurance, which is an important sector, needs to grow at a faster pace. Interestingly, post-pandemic, it has become the overtaken motor as the biggest portfolio. Earlier, motor was the largest portfolio in general insurance. Life insurance again needs to move from this investment-based regime to protection product. And general insurance, where we need to move from compulsory to essential need-based product, because again in general insurance, a lot of insurance are based on compulsory, which insurance are being done which are compulsory. People don't come from their willingness to do insurance. So some of the initiatives by the IRDA. So IRDA, as we talked about, has given a target to all companies to double the penetration in next 5 years. IRDA has recently brought out a draft regulation also for relaxing the norms for intermediaries. For example, for corporate insurance agents, they can now work for 3 insurance companies each: life, non-life, and health. But now the plan is to expand that to 9 companies each. So any person can have can work for 9 insurance companies in health, life, and health sector. And similarly for insurance marketing firms also, I think they may increase from current 2 to 6 each company. In terms of use and file procedure, again, they have allowed insurance companies to launch the product quickly, because there was some delay in approval of the product and industry was not keeping in tune with the launching of the product fast. One of the major area where IRDA is working is ease of doing business in terms of for insurance companies also and for intermediaries also. So by rationalizing of returns and removing all the blockades in terms of regulation. As Mr. Sate talked about, IRDA is thinking of introducing regional or micro insurer who would be requiring less capital. Maybe for a regional insurer, they may allow 25-50 crores of capital. So this will help a development of a particular region where a particular company has a good connect. Promoting innovation, product innovation through sandbox again is picking up. We have seen a lot of innovation in motor insurance product, where you can, they are bringing covers for pay per use, pay as you drive according to your experience. So this would be a good move. Again, IRDA is planning to launch a portal, Bima Sugam. So basically this this platform is slated to be launched in January 2023. So this would be a single platform, just like we can say Policy Bazaar, where the whole products would be available, and right from product selling to servicing can be done on this platform. And all intermediaries insurance companies can join and sell their product there. But again, this platform, I believe there would be a challenge, because bringing customers to this platform would not be easy, because in India, people don't want to buy insurance easily. They need to be pushed. So let's see what happens with this portal. But yes, it's a move in good direction. Again, they are planning to launch Bima Vahak. This is again a woman-centric force to push the penetration in the rural areas and all. IRD has also taken this dematerialization of policies, and I think from December or next year, this would be compulsory, and most of the policies would be issued in online demat form, and this will save a lot of cost for the industry also. IRDA has also mandated for this Cyber Jagrutta Divas. Basically, this is for the insurers and intermediaries. So they need to follow this cyber guidelines. For insurers, it was already applicable from the year 2017. And for insurance brokers, I think they have just implemented it from 1st of October. Again, the idea of the regulator is to move from a rule-based supervision, rule-based to supervision-based system. As Sagar sir told, in overseas we have this supervisory authorities. We don't have regulatory authorities. So IRDA should move in that direction. Revamp of customer grievance. So IRDA is revamping its current portal, which is the integrated management system. So we call it IGMS. So they are requesting it to Bima Bharosha. So there again, they want to reduce the TAT, and they are planning to make it more region specific. They have been including 13 regional languages in this portal, so that customer can file the claim easily. And again, IRDA has decided to do away with some prior approval requirements for raising capital. So that will again help the industry not to wait for the regulatory clearance. So what are the challenges for the industry? Because all these, the doubling of penetration or the things that we are talking about will not be that easy. I think the biggest challenge will be the poor perception about the insurance products. So till now, we have not been able to create a positive mindset about the industry. And for this, the whole industry needs to work together, not only insurance company, the regulator, the council, the other stakeholders, various associations. I think all need to come together to build a good positive perception about the industry. And bank assurance channel needs to be more transparent. I think a good business has been generated from this banca channel, but still they need to be more transparent in selling, and more education is needed for the people employed in the bank side, because they don't have that much of awareness about the technical aspects of products. And once a person is buying a compulsory, maybe when he's taking loan or taking something in banking products, so he does not worry much about the product he's taking. Again, health sector is not regulated in terms of charges by the hospitals. They are not regulated, so it is again causing the industry to bleed. I was just attending a conference, I think last Monday, where a regulator told that he plans to, through this Bima Sugam portal, he plans to reduce the involvement of intermediary, means direct selling agent, and he wants that people should come directly to buy insurance. I think this would be a little challenging, because agency force does a good job to just change the mindset to push the consumer to buy insurance. So needs to be seen how this works. Mis-selling, I think, again, is a big area which needs to be looked upon by IRDA. So till now, mis-selling has been doing a lot of negative publicity for the insurance business. And I know a number of call centers working from Kolkata, Noida, who are selling hundreds of crores of products, and nothing is happening to them. So that needs to be checked by IRDA with proper regulation. As Mr. Sathe told, the training is diluted. So earlier we had this IC38 agency training for the insurance agent. So now that has been deleted, and they are allowed to do on the company's mobile platform, or so that again needs to be reworked upon, because when this training started, it was quite hectic, and people got good updates about the principles of insurance and all. Rural area, again a gray area which needs to be tapped. Grievance system, as I said, IRD is revising this portal, so hopefully this should improve, and with the appointment of new ombudsman, I think this grievance area should be more easy approachable by the customers. Then raising of new capital. So this again could be a challenge for the industry. We have seen the LIC IPO, which did not do well, and still it is struggling. So it needs to be seen how the industry moves forward in raising new capital. Again, one of the area in general insurance is moving from, there is a spelling mistake, it should be competition-based selling to risk-based selling. So currently we focus more on selling competition-based products based on what competitor has given the quote. We don't offer products on the proper pricing of the product. So that needs to be looked upon. I think there are a lot of professionals maybe here today who from BVSS. So I think as we move towards this increase of penetration, we will have lot of opportunities for our professionals. It will include, as this distribution channel grows, I think this corporate agency channel, once this IRDA approves this increasing the number of companies, this channel will grow, because comparative to broking channel, it will have more companies to deal with. Then claim management would be a very good area, because as the business grows, disputes will increase. So currently there are few companies who are into this claim management, who are helping consumers to file claims and get the things settled. So this could grow. Again, in terms of insurance consultancy and risk management services, I think will grow in terms of ERM consultancy to micro and small enterprises. They will be needing expert risk professionals to for the services. Job opportunities, various roles. Survey loss adjustments and investigators also would be in demand, because as the claims increase, the need for this professionals is also be there. Insurance arbitration again is a good area where I think a good number of arbitrations take place, and it is a alternate mediation mode. Trainers, educators would be needed, because when we fill this gap of skilling and reskilling, more educators would be needed. So some of the key takeaways for the industry. So as IIT also already working upon a simplification of policies. So we need to work upon how best we can serve the customer, and we can remove the jargons and give the policy in a simplified form. For example, when we buy a policy, can insurance companies give a few small videos on how to interpret the policies? Maybe a few small FAQs, few introductory videos. When the claims takes place, they can just again send few introductory videos and very basic lines, not with the technical jargons, what needs to be done. For example, if you see in health insurance, lot of claims get rejected as they don't file the documents properly, and it takes a lot of time, maybe 2-3 months it takes to, they just keep on asking the documents. So why can't they just give a single pager document that you need a 1, 2, 3 checklists, so that at the time of filing the claim, they can just enclose all the documents. Next, to focus on customer centricity. So basically we need 3 A's: awareness, acceptability, and affordability. And the target should be consumer. So when we become consumer centric, the selling of insurance product would be easier. Robust claim management, and insurance companies should work upon reducing TAT, including the TPAs. Regulation of hospital rates again is a big area where it is uncontrolled now, and it is the reason why the industry is bleeding due to high rates of hospital. When you approach the hospitals, have a different rate for if you are insured. So this needs to be regulated properly, and currently we don't have any regulator in this space. Research and development, I think this is a very big, this area we are lacking very much, because in terms of research and development, we are doing not much in India. So once we invest in research and development, it will help in overall growth of the industry. We will get to know about the customers, we'll get to know about the intermediaries, we'll get to know about the whole ecosystem where there are gaps and what needs to be plugged. And the awareness camp, the last government products that they launched, Jeevan Jyoti and Jeevan Suraksha, and I think these two schemes had a great impact on creating awareness. I think even the poorest section of the society also knew that you can have insurance at rupees 15 or 25. So schemes like this and programs like this should help to make people more aware. Fraud management, I think Mr. Sanjay or Tarunji would to touch upon it. It is again gray area in India where the fraud figure is very high, which needs to be worked upon. Development of risk culture. Again, I think Mr. Sanjay Kumar can give a brief idea on how to develop this risk culture so that it can help in the overall growth of the industry. In terms of insurance education, again, we need to focus on from the school level itself. At least we should have 2-3 papers where, or maybe to start with at least one paper where we need to inform them about this financial inclusion, about this the financial habits of saving and insurance and all. So that will help to grow that mindset. So the basic important thing is to nurture that mindset. Once the people start buying from early age, it will be easier to continue till his old age. And if you maybe now approach any elderly person, he will not be maybe so much convinced about buying insurance. IRDS would be more approachable. New chairman is, I think, doing a fantastic job, but just needs to see how well the ecosystem supports him, and the whole industry should, I think, should come together to increase, to plug this protection gap and increase the awareness in the industry. So I think it was just a brief overview about the current status of the industry. Over to you, Naval.
Thank you, Dr. Rakesh. जिसे हिंदी में कहते हैं गागर में सागर भरना, I think आपने ऐसा ही कुछ किया है. You have given a lot of pointers for the people, especially the people who have joined from the industry side. They will understand your pointers in and out. For the people who are a little outsiders, they may find little difficulty, but they have a good checklist to refer to later on. But having said that, before I move to Tarunji, I would like to mention one thing that, in your view, is the current regulatory scheme of economic situation overall, although you have given a lot of pointers, but at a very macro level, if I have to take your comment, do we have the adequate level of support that is really needed from government policy, or do you see any 1 or 2 key pointers where the government or the regulator still needs to do much better than what they're doing right now?
Yeah, I think the regulators have already started. And last day, I think there was a representative from ministry also. So they also had a similar thing in mind of how to increase penetration, how to increase enrich the whole ecosystem of the insurance industry. So I think we are on the right path. And if we move forward in similar lines, and the industry must come together. It is not just regulator cannot help in developing the industry. The insurance industry should come forward. All the stakeholders should come forward. Educational institutions should come forward. For example, in India, we have, I think, 4 or 5 education institutes who are offering courses on insurance. So altogether, they produce, I think, 500 or 700 professionals. So is it adequate for the industry? So education-wise, I think we are very, very far behind, and I think focus should be on education. Education of insurance employees, insurance stakeholders, and also the education of consumers. So this, I think, would be the key for the growth of the industry.
Right. So I also reflect back upon your comment relating to the portals that are getting launched by government. I think you made a comment in terms of how the traffic will come there, because we really need to push people in India to get to the portal. But I think there could be one more, my view that there could be one more use of that portal. Like we see, if we compare it with some of the government portals that have been given for buying stamp duties, etc. So they are not being used by general public, but they are being used by the people sitting in the rural somewhere or sitting at the places. There are people who have made jobs out of it, that they will help the local people out of there. But there is a lot of transparency, ease of doing that has been created by that portal. So maybe the intention is there, but I would leave everyone guessing about that. Let government only clarify that.
No, I'll just add one point there. There would be a separate benefit of that portal, because currently in the portals that you have, online portals that you have, there you need to feed your information, and after
Right.
that you keep on getting calls. So maybe in this portal you will not get that sort of
You will not
call.
get.
So people can frankly just go and search for products. So they will not be
Yes.
spammed with calls.
Good. Thank you, Dr. Rakesh. Now I would quickly, I think the time is running fast, but the knowledge we must get from all the eminent speakers. So quickly, I would like to go to Tarun Singh ji. Tarun ji, over to you.
Thank you so much, Navalji, and namaskar to everybody. Good afternoon. Thanks for giving me the opportunity. Two things have happened now suddenly. I see a lot of industry fellow members in the group. That makes my job even tougher, because whatever I say, I might just get hauled up after the webinar. So keeping that in mind, let me just share with you, let me put up a disclaimer before I share anything. Whatever I say is my own opinion. You may want to disagree or agree, and then we can fight it out. Okay, and you may find my words a little too candid, but that's the way I am. So let's take it forward from where Rakesh ji left with respect to penetration. It's a $650 billion gap, insurance gap of this country. Now, how do we meet that becomes a larger question. But that seems to be answered, by a lot of so-called insurtechs that are mushrooming within this economy. And as Navalji, you rightly said that India seems to be the hub spot for insurtech within the Asia region, and rightfully so. After China, China is a little way ahead with respect to the kind of product and the kind of innovations that they are doing in terms of insurtech. India is still coming up. The other country to watch out for, other than India, is Indonesia. The economy is similar, the penetrations are similar, the challenges are similar, but that's another economy to look out for, and especially with respect to technology and insurtech. I think that's another country that's going to do wonders. But let's look at India. We're talking of a 650 billion, insurance protection gap. How do we do that? Currently, we have brokers, we have single agents, we have corporate agents, we have bank assurances. Each have their own pluses, each have their own minuses. There are positives with brokers, there are positives with agents, there are positives with bank assurance. There are also negatives with respect to why I say negatives, because what have we done over the past 20 years? Have we made progress? We have made progress, but not in the way we wanted to. There is because we are a very heavily regulated intermediary body, so that becomes a challenge. Again, we keep, it's such a large geography that most of us keep wanting to see how we could create a newer market or a newer distribution channel, bring out new insurance products within the existing domain of the regulator and the regulation. Surprisingly, while Bangladesh, Satyji spoke of Bangladesh, looking at India and other countries looking at India from a regulation point of view, I think Satyji also would agree. While Bangladesh has about 90 odd insurance companies with a population, let's say, as big as 2 states of this country, we are sitting at 58. Now, is it due to overprotection work, or is it due to our regulators' short-sightedness? And that's where the penetration also gets affected, because if you don't increase that, the supplier side, so much is what we can do as agents or brokers. Burma today has 23 odd insurance companies. Nepal has about 35 odd insurance companies, and they are growing. And I don't see how they should be growing, and we should be just staying happy with 58 or 55. But there is work being done. I think 12, 15 odd insurance companies are coming into fray. The insurtech is going to play an important role, and rightfully so, because if you want to increase penetration, and if you want to fast in a manner which is fast, which is which addresses each and every nook and corner, especially with a country where handheld devices are more in number than the number of toilets at one point of time. I think digitization is only a matter of looking at exponential growth. So what's happening within the digitization space? Are we just quote facilitators like what Policy Bazaar was early in 2004-5? Have we moved forward? I would just want to show you an InsurTech map of India, and then probably take the discussion forward from there.
Tarunji, it came, but now it has went off.
Yeah, just let me have a look what's happened. So
yeah,
let me just reshare it with you. I think there's a can you see my screen now, or is it?
I suggest you just press the back arrow button or something.
Okay. One second. Just give me a moment. Technology again. I'm speaking on technology and I'm struggling with it. But anyway, is this clear?
I think, keep it here. That's it.
Okay. So I'll just keep it here. So if you look at the value chain today, and this first quarter of 2022, and some work definitely has happened, you would see a lot of platforms and a lot of work that's being built within the InsurTech side. And so you have work on the product side, you have work on the underwriting, risk management side, sales, CRM, new business models. There is a lot of talk on the micro insurance side that's working on. So there is a lot of direct on demand portals by insurance companies themselves. And then there are other channels who worked on. So clearly you see, players who have moved on from a pure seller point of view, and created technology platforms which probably are just a database displayer, or let's say, or facilitating just ease of buying. There is work being done within each and every space. I would just like to look at some of the current trends that's working around. So the current trend and the hot piece of work that's happening is being seen. The action is being seen in the health insurance and value-added services space, more or less. There are about 50 odd players in this segment, and it slowly seems to be getting overcrowded. Basically, everybody's landed up doing everything. And I'm being very frank here, because a lot of people in the health space initially came out with wanting to ease out the buying process. So they did that. Over a period of time, they're just doing just that. And then they moved on to managing the group health side. Now, within that side, they have their own limitations. They can't display quotes. So if they can't display quotes, then what are they doing? They're just kind of easing out the administration process of decision making for the HR with respect to through intervention of technologies. You have players who are doing some work there and who have been well funded to that extent. But then the idea why they are doing that is for them to move to an insurer space over a period of a year and a half, once they collect most of the data that they have during the intermediation process. So that's the natural go-to business model. They're all trying to create. So some of them are in this are pretty unique. So as I said, some of them are doing the same thing, but some of them are pretty unique. We never heard of subscription-based health insurance policies. There is someone within this group who does subscription-based health insurance policies. That means you pay me by the month, as much as what I could do for a Tata Sky or a Netflix. I can do that on health insurance. A very great concept, a very novel concept within the Indian space, being widely accepted at the startup environment. The person who's brought this idea is doing great guns. So this is something which is very, very interesting within the health insurance space, subscription based model, and that takes, that actually makes you question, can't insurance be a subscription model, right? Not only health, can it be a and we are seeing some changes in motor to that aspect, but can I not have a subscription model? Because it is a financial obligation that I'm going to be, I'll have to meet month on month or year on year. I may not have money today, but I want to get myself covered. I may have money next year, but then how do I manage this entire thing? So clearly, these questions do keep coming out, and because of this question, there are these new business models that have come up. They are promising faster TATs. They are promising automation. So much so that subscription model also has been extended, and claims management is now being added up to clearly demarcate selling as well as efficiency in operations. There are a lot of players who are working on claims management, trying to integrate the entire process, trying to sort out the TATs, trying to ensure that the insured is well taken care of over a period of time. Their claims are settled, genuine claims are taken care of, fraudulent claims have to be. The challenges remain within the claims management also, because you can't control the hospital, you can't control the medical fraternity. And it's a well-known fact within India that no medical fraternity follows the global diagnosis process. Hence, there is always a problem with respect to the kind of diagnosis that comes up, and the insurer then raises his hand saying that it's not payable or payable, and then there are a lot of arbitration there that's going on. But the trend is more towards digital today, whether we are looking at, and predominantly people are looking at retail when they're talking digital. Okay, because it's a mass kind of a product. So it's but then again, here the challenge where these people get stuck is the product itself, because most of them are intermediaries or third party who have no control on the design of the product. Now it's an irony. Why I say it's an irony. Insurance industry globally was the frontline, actor or the frontline person who adopted technology head on. Early adapters of technology were insurance companies globally. Today, they are struggling to keep themselves afloat digitally because they have only failed to foresee the improvisation that they needed to do on the existing technology. And because it's a cost today to rework the technology that they have, they've all gone into a conservative mode, stating either a regulator issue or their profitability issue or the immaturity of the current market. That's the irony that these guys are trying to fight out with. And we've seen that in the pandemic, where everything went digital, okay, and the writing on the wall has been very clear: either you go digital or you perish. And a lot of insurers have been struggling to get onto that digital space. Innovation has actually died out. From early enablers of technology to actually laggards in terms of implementing technology. And that's why you see so many of them mushrooming here. They're trying to ease out what the insurer is unable to do. But having said that, are we able to increase the penetration? We have done what we have done today. We are still at 50% lesser than the global average. It's a long way to go. The target of 2047 and 100% penetration is a great thought process. A Bima Sugam is a great thought process, but it will not work because if you are allowing overriding commissions on one side being paid out, wherein the distribution costs are going to go higher, operational costs are going to eat into a insurer's kitty, and on the other side create a Bima Sugam, you're actually not killing the problem. You've created something to think that it will happen without addressing the basic issue that's been eating into insurance industry. So these are my thoughts, but then this is basically what's happening. You know, it's a great thing that you have something like a Bima Sugam coming up here. But then are these only available tools to increase penetration? No, these will not increase penetration at all. Where are the number of colleges that teach insurance? 0. What has the Insurance Institute of India done over the past so many years? Nothing. You read the textbooks, you will go to sleep. No one, the current generation, let me be very frank here, the millennials are least interested in insurance. They're least interested in buying an insurance policy. And that's a fact. So much so that they're least interested in joining an insurance company because they find this company, this insurance industry to be the most boring area to work. And that's a fact. I've been a teacher myself for about 15 odd years as a visiting faculty, and I've taken insurance specific courses. I mean, out of the 500 students that would have learned under me, I've had only 2 people who became associates. And after that, only one of them has been working in an insurance company. The rest of them are in US. And no one's interested. The millennials are not interested in owning things, so much so that they themselves are today questioning the fact of insurance. Right? So in this situation, how do you bring an insurance concept in the minds and also try to be, a regulator which is forward thinking? If you speak to each one of these players in the market, you will find the biggest problem they say is the regulator. Today, the regulator set up sandbox. Very good concept. None of the brokers are involved in the sandbox. How can I put up a idea into sandbox? I cannot. It's only available to the insurer. And the insurer will only do it if he feels like doing it, because those guys, I mean, sorry for my words, but then they are doing so much that they're doing, they don't even want to look at digital because it's a pain point for them. Not that work is not happening, there is work happening. But if you limit things like sandbox to only an insurer kind of a game, and then have all these players within what I've just displayed, asking them to work at the back end, you're not going to achieve what you want to achieve by 2047. You will need another 2147 to work there. 2047 doesn't happen. So I'm only trying to say that, look, InsurTech is doing what it's doing, but the regulator also needs to, from a regulation point of view, you need to broaden your base. You need to understand the reality. It's good to have those, those targets in mind. You need, it's lovely. It's wonderful. I mean, just digressing from the point Rakeshji said, targets were given to the insurance companies. Very good idea. I loved it. I was watching the entire proceeding on YouTube and I loved it, the way they gave the idea. But I didn't find even one CEO who had the guts to come up and tell the chairman that, sir, all this is fine, but how are you going to improve the basic infrastructure? Where will I get my people? Where will the education happen? What have you done with respect? Nothing. Nothing. I mean, regulator was taken to be a CBI and everybody followed him at the end of the day. That doesn't happen. That's not a regulator. And because of that attitude, we have all these problems within the insurance industry. I mean, be more open. I wrote to the chairman and I was very happy. I saw a reply in 4 days' time from him. Great. But believe me, I'm yet to get a response from his juniors. It's 6 months. So those are changes that need to be done in order to have this, and this insurance map that I'm showing you, this should have covered the entire screen. We have only so many players as of today. The ventures are now shying away from investing into the insurtech area only because they are themselves confused as to where insurance is moving within this landscape. There is one area which no one wants to touch, and everybody is talking about. You want to increase penetration, you want to bring insurtech, you go embedded. Until unless you go embedded, and I slightly want to disagree with Rakesh ji here when he said that you can't push a product for buying. Rakesh ji, embedded insurance is the way forward in a country like India. The cost of product is going to be as cheap as 10 rupees, 15 rupees. Everybody literally gets covered. And they get covered automatically. Let's say I go buy a toothbrush, and let's say these toothbrushes are electronic. The entire ecosystem can take care of my insurance as well as capture all the dental habits of mine, and then provide me a cover at a base. I want to buy a cycle. Everybody has a cycle, right? You go buy a cycle today. How many of us know that there is a cycle insurance? None of the insurers want to sell it because they categorize it as agriculture. I don't know why. It's not profit making. Agriculture is a pain point. Agriculture is a punishment department. So kyun bechne ka udhar? Now just imagine if I embedded this insurance through the seller, like a Decathlon or a Atlas dealer. The guy bought the cycle at 2000 rupees. उसमें से 25 रुपए उसके इंश्योरेंस में चले गए, उसको पता भी नहीं चला, and he is covered. Haven't you achieved your penetration target as well as your premium target there? But for benefits, I don't understand. Insurers don't want to think of this. No one wants to get into embedded. It saves a lot of time, effort, as well as does things differently. This is how you do things differently. Ayushman Bharat is a wonderful method of, let's say, an embedded form. Crop insurance, a wonderful method, but then it needs to be improved upon. But embedded is the way which no one wants to speak of. I want to set up an insurance company. I am forced to sell motor, but I don't want to sell motor, no? Let's assume I want to set up an insurance company today in this country, and I say, okay, I want to sell only health, and let's say I want to sell only property, and I want to take care of property only. I'm not able to because they put motor also as a condition. If 40% has to come from your motor, I mean, this is a thought that needs to change, right? Ease of business, right? It takes 7 months for a broker to get his license. A person who files an application online on the IRDA portal has to send another set of application after 45 days of having submitted his first application. Why? Because the application that you entered into the IRDA portal is 2015 and what they want is 2020. Simple, basic logic fails to get into the regulator here when they do this technology intervention. That I'm filling up a form of 2015 and then I'm repeating the same forms. You see, 45 days can be actually struck off. So from 7 months, I can come down to 5 months of a broking license. Technology, right? We are all online with the regulator, and this is technology where it takes 7 months to get a broking license. No wonder it takes 1.5 years for an insurance company to be formed and a license to come. And no wonder countries like Bangladesh are taking over us. I mean, what's different there? I feel Bangladesh's penetration is as bad as India's, but you have literally 90 insurance companies there. And imagine if I bring in technology there, which there is a huge requirement for technology with respect to healthcare and TPS. Imagine if I get into there, I become a millionaire rather than struggling with these 100 people out in my InsurTech India map and wondering to survive. So I just want to conclude here saying that, look, this is the kind of map that we're seeing. There's a lot of work that's happening, but how do you create an ecosystem for probably, let's say, insurance companies? I would suggest choose low-hanging fruits, and that too through an API structure. Today, it's so difficult to get an API from the insurance company. नहीं, मेरे पास मोटर हेल्थ और ट्रैवल का ही API है, मैंने होम का बनाया नहीं बनेगा. Believe me, every insurance company, if you go to do an audit on the technology department, you will not find more than 3 people working in the technology department. Out of that, one person is dedicated in Delhi for a specific technology partner. There is an insurance company that does API on a first come first serve basis. So if you apply for an API to this insurance company sitting in Gurgaon, he gives you a date of about 3 months from today, saying that I'll integrate you 3 months from today because my hands are full. The system needs to improve. It's not us. It's not the insured is waiting to be given simplified access to policies, simplified policies, better pricing. Intermediaries are there to work on this digital space. Insurers create a roadblock. And that roadblock is the challenge here. So all I'm saying is choose low-hanging fruits, go through a simple API structure, okay? Because this is what is going to enable your technology movement. This is what is going to expand your partner network, okay? And then this is what is going to drive your additional business. Whether it is web aggregator, broker, agents, loss assessors, claim fraud management team. Is anyone aware that whether there is a common portal for me or you to access, which is a red flagged claim assessor in this country? A claim assessor who should be red flagged for malpractices? Or let's say out of 5, you go to, so this is the biggest challenge. You go to 4 insurance companies or 5 insurance companies and ask them, who are your claim assessors? They may give you 5-6 common names. You ask each one separately whether they know who, if they've ever got, red flagged or ever got blacklisted. They have no clue. They exchange this information through WhatsApp. In a country which is, speaking of technology, which is the hub of Asia today, we are exchanging on WhatsApp between 4 or 5 insurers details of certain claim assessors, whether we should, whether they have been blacklisted by the other fellow or not. Shouldn't this information be available? This information should be sitting in, let's say, the IIB, which itself is a big white elephant where you don't get any data out. They'll never share data. I don't know why. What they do with the data, God only knows. They collect all the information from insurers. They collect all information from brokers. I can't even access information from IIB. They are worse. They are like ED. They are like ED. And we are saying that we are a technology hub. See the kind of work that we are doing, even with all this limitation.
Tarunji, just one request. I'm just conscious on time. Sanjay also need to speak.
Give me 2 minutes. Give me 2 minutes. I'm just finishing off. The entire ecosystem of penetration and products can change, and I keep saying, as long as you have an API single point marketplace, where you host various point of sale from an insurer perspective, you create this information, you look at embedded platform, embedded insurance, you look at the use of IoT. There are very few players who today say you can use Alexa to pay your insurance premium. There is IoT is only, people's thoughts have been that IoT is only limited to the you pay as you drive kind of policies on the vehicles. It doesn't work that way. Machine learning, AI, a huge area to be implemented with fraud mitigation. There is a lot of work happening, but still there are a lot of people who still have this blockage in their mind, saying that ML and AI will not help us with respect to fraud mitigation and fraud, so as to have proper pricing. So as I'm saying this, look, there is a lot of work that's being done in the technology space. There's a lot of work that needs to be done. It's not us as startups or us as brokers or intermediaries who need to pull up our socks and work and look at that. It's also the other side. The insurers have to work this out. The regulators have to work this out. But the fact of the matter is, coming up on platforms and speaking on a macro level that we are doing this, we are doing that, will not help until unless you ensure that at the micro level things change, right? And for that to happen, I'm not sure how many months or how many years are going to take shape, because it's a structural change. It's a mindset change that needs to take place. But the positive is that we are better than a lot of other markets in terms of technology, and a lot of other markets are taking up our technology to improve their insurtech. And I won't be surprised countries like Vietnam, Indonesia, Sri Lanka, Bangladesh go 2 steps forward using our technology there, until unless we create a proper ecosystem and smoother process of development with an insurer, regulator, and the intermediaries. Thank you so much for the time.
Thank you, Tarun. So anyways, your key message was you gave some pointers for the regulators to be, changing their, processes or SOPs. You also mentioned about certain things which should be opened up, certain regulations which need to be changed so that the specialization into the specific kind of insurance can be done. So all of these points have been duly noted by us. Now I'll quickly move to Sanjay Kumar ji for his deliberation as the enterprise risk management expert. And then, although I'm conscious of time, but in the interest of the content, it has to be delivered to the audience. I'll seek permission from all of you to extend the program by another 15 minutes. So we'll close sharp at 1. But over to Sanjay for next 10 minutes, and then we go for question answer round with all the audience.
Thanks, Mr. Nawal. And I think we have been, trying to have this session for a long time. I think we were talking for more than 6 months, and it is nice that, we have it today. Let me share my screen. Are you able to see my screen?
Yes, it is visible.
Okay. So is it okay? Can you just confirm?
Perfect.
Yeah,
Okay.
we can see.
Yeah, it's fine.
Okay. Thanks a lot. Thanks a lot, and welcome everyone from my side. First, my disclaimer: I'm a risk professional, so I must be wary of the things that the opinion expressed here is totally mine, and none of my the employer or anybody else. In this next 10 minutes time, we'll talk about the ERM trends in India and what are the opportunities. Why it is important, because we have already seen in 2008 what has happened. We have also seen during the COVID that how risk has materialized and what are the impacts. Climate risk is already showing its head, and climate risk is basically getting the next big topic across the world. What is the impact on the insurance industry? So let's take a look at the situation of the Indian insurance industry. in terms of enterprise risk management. This is based on one, my experience. Second, I'm a PhD candidate in the enterprise risk management in the insurance sector. And I have gone through more than 200 research papers and have got fair idea of what is happening across the world, where especially the Solvency II or the risk-based capital regime is there. So I will share this information in the context of that. So let me move to the next slide. I will just try to go it quickly because would like to give time to the participants as well. Risk management practices in India is currently varied. What it means that it is not uniform. Why it is not uniform? Because though regulator has given a corporate governance guidelines in 2016, but it also requires a detailed risk management framework. So currently what happens that it is where the foreign partners where there is a risk-based capital regime, they have it. Their enterprise risk management is more developed than where it is not. The reason is simple, that risk-based capital, RBC, optimizes. I have written here RBC, but it should be ERM. ERM optimize capital position of the organization, and shareholders get interested. As you know, everybody has talked that RBC is yet to start, and that has a great influence on the enterprise risk management. It has been seen across the world. What are the challenges? What are the challenges that currently we are facing? Or rather, I have observed is that something is called the 3 lines of defense model. Those who are in audit and risk management, they will understand what is 3 lines of defense model. It says that the risk team is considered to be second line, audit team is considered to be the first line, and rest of the organization is the first line. So ideally, the risk managers are the first line. Second line is basically they are the risk officers who provide the oversight. The objective of doing the risk management, the job is of first line of defense and not the second line of defense. But in reality, what happens that most of the job in most of the insurance companies in India is done by the second line of defense, which totally invalidate the 3 line of defense model. And what is the reason? There are many reasons. One reason is lack of risk culture. I think risk culture is not developed. And the reason is very simple, that first line of defense, who is the army, they are not properly trained, either through their education or perhaps through their formal training within the organization. I have also seen that CXOs lack the ownership of risk. And this point has been very well covered by the SEBI's regulation. SEBI has came out with a dedicated risk management framework last year, and they have covered this point that each of the CXOs should have a list of risk ownership. CROs require, I think, more regulatory powers and more protection in terms of, otherwise he is fighting the lone battle. And I think it's also about, his independence. CRO reporting, CRO reporting is basically debated all over the world. Half of the world says that, it is okay to report to CEO, CFO. Half of the world says that, it should report to the board, right? So that's, a debatable question. Risk qualification, I don't think that, there is any prescribed risk qualification in the insurance industry, as against the banking industry, where, they have, for the CROs, they have basically prescribed FRM qualification. CXO remunerations, this is a very important point, not being linked to the performance of the risk management. This is one of the pillars in the Western market. And I have also recently reading on the climate risk. Even in the climate risk, the organizations are separately linking the performance of directors and the senior management with the performance of the climate risk. So this is a one area which require addressing. So what are the suggestions? I will just quickly run through. First, it need a detailed risk management framework, because everybody, as a regulator is opening, I would say, I would say, I will not say loosening the thing, but allowing industry to function more freely. So what it requires is more of a governance side that need strengthening. So and regulatory powers to CRO. I think given regulatory powers to CRO and strengthening the risk management framework, I think then what the IRD is currently doing, it will give good grip on that and a good confidence that that there is in tandem they are talking to the board, not just in the corridors but also more formally. Risk culture is to be improved. That is very important. 3 lines of defense need to be enhancement. So what are the actions that is required? One, detailed guidelines and with the clear responsibilities of first and second line of defense. Detailed guidelines on the risk culture. I have been speaking to RBI last year in some of their classes, and they have been talking about coming out with a detailed risk management culture framework. Though I haven't seen yet, but I hope that it comes, but that is very much needed. Risk qualification of the CRO is the need of an hour. Linkage of compensation with the risk performance, mandatory training of all employees. This has to be mandated in order to enhance the first line of defense, and guidelines on risk disclosure. Now, supporting these points, the examples are already there within our country. SBI, if you go through the SBI's risk management framework, it is detailed. Though I have not read RBI's, but this is it has taken lots of good points from the Western market. It has clearly defined the 3 line of defense model with the explicit roles of first and second line. RBI guidelines defines the CRO, not guidelines, I would say. Somewhere it says that it require FRM. SEBI, is another good point, that developing the parameters for the performance appraisal. That's what we are talking about, the compensation. Develop human resource practices. That's why we are talking of the training, the recruitment. Risk culture development is mentioned in the SEBI guidelines. So there is a lot to learn from the SEBI's risk management framework guidelines. So I will take another 2 minutes. Opportunities, I think if I talk about the opportunities, very early days, it's only 20 years old. ERM, there's a difference between traditional risk management and enterprise risk management. ERM is not same as TRM, so it's only 2 decades old. There's a lot of opportunity. Risks are coming, it is around the corner, right? And ERM is a clear value addition, and many academic authors which I have read, it clearly says that there is a clear value addition of ERM into the firm's value, right? I would just like to show you a few things. And of course, everybody has talked about increasing the education in the business school, right? That is, again, the need of the hour. Only then the first line will get strengthened. These are, a graph of research papers. This is of 187 research papers that I have analyzed from the insurance industry, right? And it can be clearly seen that how does the ERM has developed. So you can see that most, it has started around 97, 2002, 8 papers were published. And then there is, the increase there over the period of time, which clearly indicate then the academic side also, as well as on the practitioner side, it started around, around the year 2000, and it has, increased. But, one important information in the next slide is that if I analyze by country, you will see that where we are, compared to the Western market. In Europe, it is 71, 64 in North America. Asia is 33. In India, we have got 4 people. I have yet to find a single person who is doing research in insurance sector in India. I think excluding, right? So in Asia, most of the work is done in Australia, Malaysia, Singapore, and Japan, right? So these are the present positions of enterprise risk management, right? My objective is to help out whatever I can do to enhance the risk management education in India, and therefore I have written this book which can help academicians and the practitioners, right? And so that the cap can be squeezed down. So Navalji, I think I am through with my presentation, and you can open the floor for the question.
Yeah, thank you so much for your presentation, Mr. Sanjay. It was very interesting to see some of these data points around how much research is happening where, and especially the concept of ERM. So I'll, as suggested by you, I'll open the forum for the questions. Some of the questions that we already have, I'll go quickly one by one. Maybe I'll start with Mr. Sathe. Sir, I think already 3 of the eminent speakers have shared their views. If you have any quick comment on that before we actually get into the question and answer, it will be nice from your side.
No, I don't have to comment anything, especially on regulator. But it was a good discussion. Actually, every panel expert has a domain expertise in his area, and they really did best justice to the topic that was given.
Sure, sure. So I'll take your candid views later on, it seems.
Yeah, not publicly.
Okay, so then I'll start with Dr. Rakesh. Dr. Rakesh, relating to there has been a question because as you are aware, we got around 200 odd registrations for this program, although the joiners were around 70 to 80 average. And some of the people are also, watching us on the YouTube channel. So one of the questions which were asked by audience, I'm just representing on their behalf to you, is how do you perceive the demand for cyber liability, director's liability, and other liability products grow in the Indian market? And linked to that is the innovation is the buzzword for growth of any industry. So with a lot of initiatives like bite-sized products, new startups in insurance, etc., how do you foresee innovation propelling the growth? A very quick one from your side, and then I'll take a comment from Tarunji also on that.
Yeah, thank you, Navalji. So I think in terms of cyber liability, as more and more we move towards technology, the risk of the cyber attacks will increase. And the losses from the cyber attacks can be huge. This may lead to disruption of services, leakage of data, and GDPR regulation, as we all know, it is quite formidable from India, and which can result in huge damages. So gradually, demand for these products will increase. And similarly, as the legal environment matures, the customer gets more informed, the demands for liability products will also increase. And especially when we talk of professionals, the way the things are moving, professionals need to have this liability insurance to cover their regular practice, and this liability policies will help them to safeguard from this future liability. And in terms of innovation in products, as Tarunji said, it will be the time of embedded products. And for example, when we price any product, it may be people don't want to buy, maybe they don't want to pay a sizable premium. So this through this embedded product, we can reduce the premium size, and by paying few rupees, as I said, we can write a cap, and we can just cover our particular ride. And the market is huge. If you see the consumer market, and if you link this startup, this bite-sized products and embedded products to that, the market can be huge. And since the amount is very small, I think this market is bound to grow, and it can make a significant contribution in the insurance and the whole growth of the industry.
Yeah, I have a leading question to that. You mentioned about professional liability, insurance, and I'm myself an auditor, and then a lot of people over here from BVSS also watching you who are either chartered accountants in practice or auditors or some other profession which has this professional hazard that if something goes wrong, you can be held liable. So, but really we don't have that kind of product. So I think Tarun spoke about having embedded insurance, as you also, just now mentioned, considering that the market size is not that huge for this size, this kind of insurance, especially on the professional side. Do you think that, having some products embedded into the role itself would make a lot of sense? Like, for example, if someone is a CXO or a CFO, or a company secretary having so-and-so responsibility and liability, then automatically it should be embedded within the role that he needs to have this kind of insurance. What is your quick view on that?
Yeah, I think it is a very good idea, because if it gets integrated, then he did not worry about that particular role. But again, the challenge will be premium. In terms of liability policies, the premiums are a bit high because we don't have a very mass market for it.
Yeah.
So premium would be a challenge. We need to tone down the premium. We need to increase awareness. So as the awareness increases and people buy more insurance, I think in future this cost will come down. And in fact, it is a high time for industries to embed this insurance also into different roles, so that they can safeguard this employees, and this can be also given as a job advantage also, that okay, you get insurance with your role, so you can do your work free. So it's a good idea to embed that.
Sure. Tarunji, any comment from your side? And then I'll take a quick comment from Sanjay also.
Yeah. So I agree with Rakeshji. Innovation is the key, point one. Embedded is the way forward, because in a market like India, I think this is one of the biggest game changers. Two, as long as you have a population that is growing in awareness, okay, and as long as things start become more litigious because of terms and conditions and other things, and as long as people realize that their actions can be taken to court, it is but only evident that liability lines policies will only move up, and the acceptance and people will start buying, because the thought process is mere ko kuch nahi hoga, main kuch nahi karunga. So I'm a son at the end of the day, but then people don't realize that actions can mean differently to different people. So this is basically, I agree to what Rakeshji said, and to that extent, I again come back to the same thing. I want to just change the entire thought process of insurance, especially general insurance. My question is, why do you want an indemnity-based policy? Why can't a policy be given on a benefit basis across?
Okay. So with that note, I'll go to Sanjay. Any quick views on that?
No, sir. I think it has already been covered.
Okay. So my next question is to Tarunji. I think one of the questions which has been already discussed, but still I would like to re-emphasize on the insurance fraud. How, using the technology, audience is trying to ask how we can reduce or mitigate the fraud risks.
See, there are 2-3 ways to look at it, though this is a very large topic, and it will take another 2 days for me to answer at every stage. But then there are very clear areas to this. One is you have a client-facing data collection point, okay, which itself can work out, and some of them are doing it where they have live feeds of their Aadhaar and live feeds of the PAN and proposal form, and the photo is clicked in live session. So that's one of the ways in which you're trying to reduce the fraud. But nevertheless, fraudsters are 2 steps ahead in that also. Now the other side, so this is the front-facing team where fraud can work, technology can work in terms of capturing data online, real time, and then ensuring policies are issued. The other side is again with respect to the claims, with respect to claim investigators, and with respect to underwriting. So today we are working in silos. So if my client facing team right to my underwriting team is integrated in a way that the data is flowing freely to the underwriter and the changes are real time, information is real time, the fraudulent fraudulent policies that get sold, I'm not talking of mis-selling, but the fraudulent policies that get sold can get minimized to an extent. I'm not saying you can go zero. It can get minimized to an extent. Similarly, on the other side, when a claim is filed, the entire action from the claim side to the investigator to the person who's actually sold the policy, if that gets integrated, and a very high use of artificial intelligence and machine learning in this to preempt a fraud. Frauds are always known when after it's happened, but then you can have these actions, okay, the probable data points that get collected to predict. The idea is for predictive analysis, and that's where the challenge is. If I can predict the next action on this particular proposal, to flag it as fraudulent, it may or may not be, but then that again saves a lot of cost, a lot of time, and creates better.
I think Mr. Sathe also wants to make a point.
Actually, on this, a couple of years before, good attempt was made by one Mr. Ganesh Iyer, and a lot of companies had joined hands, life insurance companies, and using blockchain technology, whatever early claim comes, the data will be put into that blockchain. And other insurance companies will also be in a position to check whether a similar claim has been reported with them. And this has actually helped many insurance companies to stop the frauds, because it has been seen in the past that one person used to take policies from different insurance companies under non-medical scheme. And since it was of a small sum, no insurance company ever bothered to settle. But on investigation, when one company found that no, this is a fraudulent claim, then even there have been cases that it has gone to court, and court said when 3 companies have settled the claim, what problem you have in settling the claim? That should not happen. As a result of which, many private life insurance companies have joined hands, and they are putting these early claims into that blockchain, as a result of which it has helped to stop the fraudulent claims to a great extent. Great work done.
That's a good insight.
So much so that, Naval sir, I don't know if people know this, Sateji will be aware of it. The GIC Council 2 years back came out with a RFQ. Okay, they wanted to set up a portal in which all these so-called fraudulent claims, can get captured. I think it is still work in progress, because a lot of my people whom I know who had participated in the RFQ. So this is a portal that can actually do wonders, if it comes up. And the faster it comes up, the better it is, because as I keep saying, fraudsters are 2 steps ahead of us. So I think GIC needs to also look into and finish this project ASAP to help the industry.
All right.
Any comment from Sanjay? I think you raised your hand.
I just wanted to make 1 or 2 additions. I think both are bang on in terms of using the technology. Predictive analytics is one thing. One more thing which is happening in the European market, that the insurance companies are integrating their data. That they are basically collating data from all sources available, not only their policy data but also from the web scraping. So using the technology and getting the data from all the sources. So there is an initial investment in terms of applying those technologies, right? And then using those data points to help detect the fraud. So that's a one more thing which can be done in the Indian market with some investment, definitely.
Sure, thank you for your comments. Maybe I'll go to the next question. The next question is to you, Sanjay. How is RBC going to help in improving ERM, and how climate risk is going to impact the insurance industry?
I think these are two different questions, right?
Yeah.
I can answer both one by one. Actually, I wrote one paper on this because if we analyze how does the RBC is developed over the period from US to Europe over the period of 90s and 2000. And so because what happens that risk-based capital currently in India is a function of a formula. It does not entice shareholders. It is not going to give them any benefit if they invest in the risk management. So what happens that when the capital becomes a function of the risk, then the risk management become kind of a driver of your capital. So you manage your capital, your risk, your capital get optimized. So there is a clear relationship between the two. And if you look at any of the developed market where both have gone in tandem, right? They cannot exist without each other. So yes, ERM can exist without RBC, but for RBC to exist, ERM should be there, right? So I think this is perhaps one of the reasons could be that we are seeing slow development in ERM in the Indian market. Second question is on the climate risk side, right? Climate
Yes.
risk is basically next big risk, and it is going to have from the global point of view. There are two things have been talked about. One is what is the impact on the insurance companies in terms of their claim. The second thing is that how to achieve net zero, and the target is to achieve net zero by 2050, right? It means that whatever the carbon emission is there, that get neutralized. So in order to do that, how does the insurance companies can help? One is definitely by not investing in the assets, which is where they are carbon intensive. If because insurance company has got lots of funds, and there is a clear again I would give the example of the Europe, where insurance companies have already made a plan how to shift their existing investment towards the green investment. So that's one way achieving net zero. Second is the underwriting, not insuring those companies which are carbon producing. So there are two problems. One is helping the world achieve net zero. That's how the insurance companies can help. The second question is what is going to be the impact on the insurance companies, right? So these are the two areas that need separate deliberation, and I think lots of work is already going on.
Thank you. One question to Dr. Rakesh. Dr. Rakesh, one of the audience, I think Mr. Hanmantlu is from BVSS BOD Board of Directors Group. It's more of a suggestion actually. He is asking why not to have unique insurance identification number based on PAN or Aadhaar card for one person or something. Any views on that?
Yeah, nothing is specific, because I think KYC is still missing in the industry. And once we move on to this dematerialization of policies from December 22, I think there will be some sort of mandatory KYC. So maybe from next year onwards, there would be this KYC requirement would be fulfilled, and already we are having a lot of this KYC work in the fintech area. And a separate for insurance industry, I think again it would be a trouble for consumers. So maybe with the eKYC that IRDA is planning with the demat of policies, let's see what comes.
Sure. Now I'll go to Tarun, and then after that we will have at best one more question, and before wrapping up, because I'm very conscious of the time. We are very late.
It seems I've invited a lot of questions.
No, it's good only. Engagement is always
good.
So, Tarun, in terms of, do you have any view on the health insurance profitability? A lot of audience have actually commented that health insurance, why it is not profitable. So do you have any specific, pointers on how the situation can improve? And someone has actually, just give me one more moment. Someone has actually tried to give a hint upon scope for critical illness in India in the brackets, if you could just address that.
So again, two questions. Let me address the first one. In my opinion, the way profitability can work for health insurance, and health insurance are not doing well. There are a few reasons to it. The kind of morbidity data that they're working on is not India specific. If they work on India specific disease related work, then I think the entire game will change. Having said that, if we stop subsidizing corporate insurance policies basis the retail health insurance policies, because we are using retail health insurance to subsidize the corporate policies. Okay, there's no parity there. So if we stop doing that, there's going to be a larger framework, in terms of rationality, and then there's a lot of profitability that can come up from that. Thirdly, I'm not going into the expense management expense side. I'm going into the distribution cost side, right? I'm very clear here that distribution expense should be brought down. You cannot be paying 50-55% on a health insurance policy. It can come down by another 30 basis points. If you do that, you will anyway ensure profitability out here. That's important. Digital, non-digital doesn't make a difference. I'm very clear, your cost is only because of the hard payouts that you're giving out. Your cost is only because of the pricing structure, which is based on some demographic data, which is not India-centric. Why? Because the reinsurer at the back has created his own pricing mechanism on that particular data, which you are probably trying to use, and there's no scientific basis. Thirdly, I think there is, forget cross-subsidization, I think there is some amount of social thought process evolving in the health insurance pricing, where people are afraid to increase the health insurance pricing realistically because the market share of their existing structure is going to go down. Now, these are short-term issues. It will all level out over a period of time, because one starts revising their health insurance prices, everybody will follow in line, and the prices will come up to an, stabilize at one particular point. But the larger cost is the distribution cost, which needs to go down in terms of overriding commission and things like that. And Bima Sugam is not going to help that. The insurer is anyway going to pay on the way I see it, they will land up paying money there. That is one. Second is critical illness. Now, critical illness is a benefit driven policy as far as I know. Right? And considering the kind of critical illnesses and diseases jumping day by day within the Indian population, I think there has to be some more serious thought in terms of looking at it from a benefit policy, and because it also involves continuous medication and continuous treatment. So I think newer policies need to evolve to address that line, right? You cannot have it as an add-on now to a health insurance or a life insurance policy and be happy with it. No, you will have to treat it as a specific policy.
Yeah, Mr. Sathe wants to make a point.
Yeah, actually, as far as costing of health insurance or any policy is concerned, everybody is talking about distribution cost that has to go down, no doubt about it. But nobody is talking about 18% GST, which is charged on health policies. It's surprising. Is it not a cost? It's a huge cost. And the government must consider reducing the GST on health policies, because it is a necessity.
Yes.
And no necessity should have any sort of indirect taxation. This is a general principle. But unfortunately, neither government is paying attention, nor anybody is talking about it.
Now that you have picked it up, sir, we will take about it. We'll talk about it.
So I think, you know what, Nileshji and Naval, what's happened is we have raised it within the intermediary forum, within a lot of forums we've raised it. We've also raised it to the FM, mind you, as let's say the Brokers Association. I think the president and the directors, some of them are my friends, and I get to know that they did raise it in the meeting with the FM. But I believe this is a money, it's a money bag for them, especially this particular line. So they're very categorical, saying that they will not relook at the GST for some time now. But I think, Sataji, you're very right. I don't see why we should have a GST on health insurance. If you want, I think it should remain at about 2.5 or 5% max to max. 18% is like fleecing the, and then we speak of increasing penetration. It's not going to happen. It's
Okay.
like,
So now one last question, Sanjay.
Navalji, I have a counter question.
Okay, please.
Right. GST is there even in life insurance policies, and they are profitable. So why this GST is the culprit?
No. Shall I answer this? GST is coming in way of increasing the penetration. It's not a question of profit or loss.
Yes.
Question is, when a product is designed, it is GST is out of the purview of that, of insurance companies, because that is something which is beyond, that is not taken into account while designing a product, because the GST rates may keep varying. So
Sir, agree with
profitability
you.
has nothing to do with GST rate.
No,
GST
sir,
rate comes in, just take example. The term insurance premium is so low, and on the top of it, it is loaded with 18% GST.
Sir,
So that is
I
atrocious.
agree.
And I have
agree
been raising it in all forums. This is simply atrocious, and government must reduce it. It goes without saying.
I agree with you, sir, that GST is coming in a way of penetration. But I think the question was on the profitability of the health insurance. So my counter question was in the context of the profitability and not in the context of the penetration.
That Mr.
Right.
will reply.
No, I think Mr. Sathe spoke in the context of penetration.
Penetration, right. That's okay.
So
That's fine.
just last question before we wrap this up is to Sanjay, you. How do you see the current risk management education system to help develop ERM across every field?
I think, to be honest, if I give a blunt answer, very poor. It all starts from education, right? The model that we have created, the 3-line of defense model. All the first line supposed to have all risk management education, right? It means that the business school at least should teach it as a core curriculum, which they are not doing. So there's no source of formal education for general people, those who are supposed to be the army, who is going to defend each of the risks, right? So every education system from at the graduate level should have a risk management if we want to have a 3-line of defense model properly functioning. Or the risk training should be so rigorous that require investment. So currently, I think I have also seen the world over. I've gone through and seen the course curriculum of international business schools, and there also the ERM education is not there. I think this problem is not just specific to India, but this problem is kind of a global problem. One is of risk culture, and second is of 3-line of defense model not properly functioning.
Okay, thank you for answering that. And there were a couple of other comments also. Someone said that relating to the previous question, someone said that it is also about the hospital costs that the health insurance is also linked at. But with that note, I would like to give a very heartfelt thank you to all of you to share such an immense knowledge with the audience at BVSS Forum and in this joint program with RMAI. I would like to thank RMAI also, because we have been conceptualizing this program, me and Sanjay, for a very long time, as he also mentioned. But I was always wary of the fact that, most of the membership of BVSS is finance professionals. So, how much interest they will take into a very sector specific, and that to a sector, which, like Tarun was also saying, that out of 100, only 4 ended up being in the insurance sector ultimately. So I was always worried about the audience part, but I think this has gone very well with your support and the kind of learnings for me personally, as well as for the audience. I think they have been immense. There have been a lot of pointers in this which may be useful for the regulators as well as for the policy makers, for the top management people, and the other professionals who are working in the industry or who aim to work in the industry. So I thank all of you, especially Mr. Sathe. Your presence was immensely helpful. And Dr. Rakesh, Tarunji, Sanjay sir, all of you, thank you so much. And we might, have few more sessions in the future based on the demand from the audience. So once again, thank you so much. And some of these pointers, we'll be documenting them maybe on the blog of BVSS, and we will be also circulating them, but after obviously equalizing with all of you. So have a great day, all of you. And thank you all in the audience who have been asking wonderful questions and to make it very, very interesting. So thank you so much and have a great weekend, all of you.
Good.
Thank you. Thank you for the
Thanks a lot.
opportunity. Thank you. Have a nice day.
Thank you.
Bye-bye.
Thank you.
Happy Diwali, everybody.
Happy
Happy
Diwali.
Happy Diwali to
Happy
everyone.
Thank you so much, sir. Thank you.
Thank you.
Bye-bye.
Thank
Thank
you.
you.